afternoon, and thank you for joining us. My name is Trin Nguyen, and I am the Director of the Mayor's Office of Workforce Development, which includes the Mayor's Office of Financial Empowerment. It's so good to see all of you and my colleagues here who have worked in the field for so long and haven't seen. The OFE was created in 2014 to connect city residents with access to credit building programs, financial education, and one-on-one financial and employment coaching. We appreciate the opportunity to work with a number of community-based and national partners, several of whom have joined us today to examine and highlight the work being done to ensure an equitable recovery here in Boston following the pandemic. Please note that we will be recording this event. It is my privilege today to introduce Mayor Kim Janey, who is leading Boston through the COVID-19 pandemic with a citywide agenda for recovery, reopening, and renewal. Kim Janey is the 55th mayor of Boston. She was sworn in as the first woman and the first Black mayor in the city's history on March the 24th, 2021. Mayor Janey's pandemic recovery priorities include distributing vaccines effectively, returning children to school safely, and centering disadvantaged workers and businesses in the city's economic recovery. Mayor Janey is committed to ensuring the city of Boston reopens safely and equitably, with relief and renewal in every single neighborhood. A proud fourth-generation Roxbury resident, Mayor Janey comes from a long line of educators, entrepreneurs, artists, and advocates. Mayor Janey was raised with values that guide her to this day: the importance of education, the power of community organizing, and the fundamental principles of equity and justice. I can't think of anyone better to lead the city today than Mayor Janey. Thank you. Mayor Janey, over to you.
Thank you so much. Thank you, Trin, for your leadership. Many thanks to your entire team. And many thanks to our moderator for this afternoon and to everyone who is on this Zoom. You know, financial literacy and financial empowerment are issues that are deeply personal to me. I'll just share a quick story. My grandmother, she tried to impart her wisdom about financial literacy and economic empowerment onto me, but I had to learn the hard way. She was the one in our family who understood how to use money as a tool, but she was the outlier, like many folks, during this time and even still today, money was kept in a coffee can or under a mattress. Growing up for me in the 1980s, when I was coming of age, there was a culture of a luxury, of watching television shows like Dynasty and Dallas, and there was just this desire to show that you had wealth, even if you did not have wealth. And so right out of high school, like so many other young people, I was bombarded with credit card applications. And of course, like so many folks, I filled out those applications, and here I am, 18, 19, 20 years old, with credit cards, but not really with the wisdom of how to utilize credit and how to use it as a tool. And so I got into debt. I remember having my first American Express card and just feeling like I had arrived. That was the thing that people, wanted to do, to be able to pull out that card and make a purchase or go out to a restaurant. But I had to learn the hard way because those lessons from my grandmother, didn't stick when, you're grown and you're not really grown, but I was 18, 19, 20 years old, but I thought I knew what I was doing. And unfortunately, I had to learn the hard way. I got into debt and messed up my credit, and then had to really teach myself how to get a hold of my finances and how to create a budget, how to manage my finances, pay myself first, and use credit the right way. This again wasn't taught in my family, with the exception of my grandmother, who tried. But during this time when I was growing up, money was a taboo subject. You just didn't talk about it. I remember, When I was a kid, one time I asked my father how much money he made, and it was very clear that those were things that you didn't talk about, and I was chastised for asking. And so when I became a parent, I did the opposite. I talked to my daughter all the time about how to build credit, how to pay yourself first, how to create a budget, the importance of owning property, and how to avoid predatory lending that we know for too often targets poor communities of color. Not to mention the scams that people could fall prey to. And so it is very important that we continue to do this work that this office is doing, the Office of Financial Empowerment, that we are helping to equip residents in the city of Boston on how to become much more fluent when it comes to financial literacy, so that we can take a hold of our finances and break the cycle of poverty. That does not mean that we give up our work on fighting against discriminatory practices and policies that got us here in the first place. We have to keep up both efforts. One, to arm our residents with the information and knowledge that they need so that they can make informed decisions from a whole range of issues, whether it is how to open up a bank account, how to get good credit, rebuild your credit if it is in a bad situation now. And the steps are easier than people realize. It is about having that information, whether it is about career coaching, whether it's how to buy your first home, whether it is the importance of having a will, whether it's the importance of a prenuptial agreement. These are all just financial tools that can help us and protect our assets. But we don't talk about them enough, and we need to talk about them more with our families. We need to help our young people in schools and do more in our schools around financial literacy, because we know the wealth gap is real. We know that there is a $250,000 wealth gap in Boston, and that one of the ways we're going to tackle that is by creating opportunities for ownership, whether home ownership or business ownership. And to do both of those things mean that we have to have our own finances in order. And again, trust me, as someone who still needs to ensure that we are getting information out to residents, that I am still helping with people in my own family and trying to be to others what my grandmother was to me, so that folks don't have to learn the hard way. And so just really important to do this work. And I'm so grateful for the work that is underway here in the city of Boston to help our residents become empowered through their finances. Money is a tool, and we can use it to support our goals and our dreams. And that means that we start by giving people the information that they need so that they can make good choices for themselves, while we continue to fight against the discriminatory policies that were years and decades in the making, and that we continue to create new opportunities so that our recovery here in the city of Boston is in fact equitable. What is very clear is that we are not going back to the way things were before. Before there is this wealth gap and income inequality, we have an opportunity right now to create a stronger Boston, a Boston that is more equitable, just, and resilient. And so I'm grateful for the work that my team is doing, and for all of the folks who are here, who share this vision for a better Boston for all. Thank you so much. And I'm going to turn it back over to you, Tren.
Thank you, Mayor, and thank you for the personal story. I really appreciate, and I think the city and my colleagues and the nonprofit partners all appreciate how you use your personal stories and your struggles and integrate them in movements and victories and policy making to advance our city. So there's no one better, as I said earlier, to lead us to an economic, equitable recovery than you. So thank you for stepping up. It's not easy, girl, I know. So thank you, and keep going. And we're all here for you. Anything you need, let us know. And I'm going to hand it over to our moderator and our speaker, Prabal, from the Boston Federal Reserve, who has been an adamant partner with the city and with our nonprofits from day one. So I'll turn it over to you, Prabal.
Thank you so much, and thank you, Mayor Janey, for that talk. You know, what's really interesting about it is you gave your personal story, but embedded in there were principles of financial literacy. I mean, you gave the rules of thumb that people really need to keep in their minds, and what effective financial literacy research says that's important. And the other aspect that you spoke about was, you know, at the right time and at different phases in your life. And I also thought that itself is, you know, that could be a brochure for financial literacy, or a story or a video clip that you just gave us. So thank you for that, and how honored I am to be on this panel after your talk. I also want to thank Trin for this opportunity. You know, Trin, like the line from Hamilton is "Immigrants get it done," and you definitely get it done. And I know your story as well is gripping and inspiring to me. So thank you for this opportunity. I'm really honored to be your moderator, and let's bring up the slides. Yes, thank you, Justin. So let's go down to the title slide. Maybe 2 more slides. Terrific. And then I'm going to give some quick remarks with some data. I'm from the Fed, have to do data. I also will then introduce the panel. Just know this is going to be a discussion amongst the panel, and I really hope a conversation, not just someone talking at you to give you the Zoom fatigue. I'm also so glad that with the pandemic improving, I don't have to give this speech in a mask, so that's great. Little that's a joke. So I can't hear the laughter out there in cyberspace, but I know it's there. So I'm here to talk a little bit about financial stability in Boston. Obviously, with the Boston Fed, you should know that we have a long history of research that relates to topics in Boston arising from that famous lending discrimination study back in the 1990s, out through to the color of wealth, which did point out very large disparities across racial and ethnic groups in wealth, a very stark wealth divide. My talk today, though brief, is really going to focus on the pandemic, but also make the case that things were very precarious for households in Boston prior to that pandemic. Next slide, please, Justin. So I don't need to tell you that this is, in many ways, at the state level, a very affluent place, right? Massachusetts as a whole is well above US averages for income and for education and for housing values. But as you know, and I'll show to you just to document, residents of color in Boston in particular were more likely to experience financial precarity before the pandemic, and therefore, when the pandemic hit, were less prepared financially than others across the state for this huge disruption. Certainly the government stimulus and response made a huge difference and makes a huge difference, but still there's differences as I'll get to by sector. And this is despite some real advantages the city has, right? You know, there's access to public transit. The labor force participation here in the city is comparatively higher, including amongst people of color. More people are working and still have trouble getting by. And I want to share that what that means is the important role of having a quality job, right, at a living wage with access to benefits like health insurance and asset building, as well as, of course, as everyone knows, the expensive cost of housing, but also the cost of things in particular for parents, especially for parents and particularly for women, the high cost of childcare. Next slide, please. So here, just to show you what a catastrophe the COVID pandemic was, the onset of that. Let's go back to last year, very different place. You see that this enormous spike in unemployment claims for the state of Massachusetts, and then an improvement, but it's you know, it's asymptotic. It's sort of like converging slowly. And the main point I just want to get to you across to you here is, you know, there's talk about, you know, sort of attention to prices and inflation, and you know, you can see that jobs are being advertised. At the same time, there's still a long ways to go. The Fed's mandate is yes, stable prices, but also full employment. We take the full employment very seriously, and we have a ways to go. Next slide, please. So who was hit hard? Again, here, it's not a surprise, but I think the magnitude here, I just want to share with you. This is July last year, so a couple months into the pandemic, but really still at its peak. You see about a third of accommodation and food service workforce were claiming unemployment, and very high rates for transportation, right? So you think about airlines, but not just airlines. Let's think about the city of Boston and neighborhoods, right? The limousine services and car services, right? Hit hard. Who's going anywhere? And so you see also arts and entertainment, and this is the cultural economy is so important. Tourism economy, arts, entertainment to the city. Think here, and that's everywhere from the Museum of Fine Arts, right? The sort of grand facility, but especially those cultural and neighborhood cultural organizations is serving all the different ethnic populations here, really getting hit hard. Next slide, please. So this is sort of sectors taken out over time. And I think the point here is if you look at that blip, a couple of things that you may not be as aware of. First, the education and health sector, essential, key to the Boston economy, really hit hard. And now this data only go through September of last year, so there's been some recovery since then, of course, but still isn't to the levels of where it started. And if you think about health, right, elective procedures, right, not happening. So big cuts in revenue and yes, cuts in jobs. Similar for education, students not here, not present. Doesn't mean the universities have gone away, but it does mean that you see job loss in that sector. Certainly trade and transport I talked about earlier, and a big drop in that leisure and hospitality sector. People are back in restaurants. I have some real-time data that I didn't show here that show that restaurants across the country, an index of restaurant growth is national data, are about 80%, including takeout, of where they were in terms of sort of a sales index. So it's getting up there. I don't have the Boston figure for that, but it's still not back to where it needs to be. Next slide, please. Sorry, a previous slide, just one other point, which is to say I focused on those sectors, but other sectors like manufacturing, right, pretty flat, right? Able to adjust, do some remote work, bring people in safely, and certainly, there've been issues with supply chain and other issues of that nature. But you don't see that enormous hit. I would compare this a bit to the 2008 recession. One overall point I would make, and I wish I'd put a graph together to really show this, but the low-wage jobs were hit hardest, right? If you think about the sectors, in particular, leisure, hospitality, food and accommodation, this was really a catastrophe, a recession on the lowest wage end of the sector, whereas the previous recession, the Great Recession, was much more in the sort of the manufacturing financial. Here, manufacturing financial sort of more flat, and you really see it in the lower wage service sector. Next slide, please. So let's think about this sort of financial precarity before COVID. So there's a lot of numbers on this graph, but I want to sort of focus you. So the left side, listed in Suffolk County, is essentially Boston. We have county level data. The right side is the state. Then for each bar, the first bar is the whole population. Second bar, the white population, then Black, Asian, and that includes other not designated, and all Hispanic. Each of the white, Black, and Asian categories are also non-Hispanic. So those are mutually exclusive categories. Great. I only have a couple more slides here, and I promise we'll get to the discussion. I think the overall thing here to say is that the population of color less likely to work full time, more likely to work part time. You can see very high higher part time numbers, and also more likely to be either unemployed or not in a labor force. I talked about higher levels of workforce participation. That does differ by racial ethnic group. Next slide, please. But what's important here when I talk about the quality of jobs, right, is that many people of color in Boston who are work full time are more likely to have a low family income. So here the dark blue bar is living under the poverty line. The sort of light blue bar is near poor. So from the poverty line to double the poverty line. But that's still, in a place like Boston, that's really, really difficult to live on. We know all the reasons why the poverty line doesn't actually measure the true nature of financial distress. So you can see for Blacks, it's considerably higher than for whites, right? So we talk about the racial divide. Also very high for Asians as well in the city of Boston. And I want to emphasize this, that if you break out Asian for the rest of the state, which I didn't show on this graph, it's a pretty different picture. But here in Boston, it is a high number living poor or near poor, and it's also very high for the Hispanic population. Next slide, please. Thinking here about sort of financial stability, and the mayor spoke about debt and taking on debt. A quarter of the population, 25% in Boston, have debt in collections. And I apologize here, it appears to say across the state, but it's about 20% across the state. It's 25% for Boston, so higher proportion of debt in collections for everyone, but that gets to be very high when you look at communities of color. And here we've combined those Black, Hispanic, and Asian categories. 36% have a single, now this is for any debt in collections. You could have a single debt in collection. It doesn't mean your whole net worth position is in debt. It means you have a debt that's in collection. And so but it's an indicator of distress, and it's a high share. And then next slide, I want to talk a little bit here also about sort of credit picture. And it's not a surprise that given that picture, the prime credit score defined here as 720 or above. Just over half are in Suffolk County are here in the prime category, about 20%, 19% near prime, and then 28% of the population in Suffolk County have a credit score that's less than 660, which would be qualified as a prime. And I know that a credit initiative through a whole set of partners that are working on this effort, including the United Way. Next slide, please. Sorry, I'm going kind of quickly, but I want to just give a picture. So here, I think what you're looking at here is the denial rate, denied for a loan, and this is for a home mortgage loan. This is from home mortgage data. Each set of data is a different income quintile, and then you see left to right, white, Black, Asian, Hispanic. This is how the data are broken out. At every income level, the denial rate for each of the category of people of color, Black, Asian, Hispanic, is higher. So even at the top income quintiles, you still see higher denial rates. I should emphasize this does not prove evidence of discrimination, nor does it disprove evidence of discrimination. It shows a disparity. You need other data about loan and borrower characteristics to be able to make that determination. But it does show that there are important differences, and whether discrimination or not, it does show that even in higher income levels, there may still be financial instability that doesn't allow you to be approved for a home loan. And I think that points to some of the wealth that I spoke about earlier that we're going to be talking about. Last stat is just for those who can buy a property. Next slide, please. I think what this graph really just shows is that Black and Hispanic borrowers tend to use the FHA program, which allow lower down payments. So the median is about 5% down. This is only at the time of origination. And Asian and white populations are able to put 20% down and get a loan that's conforming or through Fannie and Freddie. But just to say, at the time of origination, whites and Asians are more likely to be able to put down enough funds for 20%. If you could go back to the intro slide, I think I just want to make my last comment, my intro slide. Yes, thank you. And then let's have the discussion. I think thinking about, we love to talk here about sort of solutions. certainly tackling the wealth divide. I emphasized here the role of quality jobs and incomes, but the role of housing and access to things like childcare. More needs to be done to really look at what solutions are effective and evaluate those solutions using data. So with that, I'd love to introduce the panel. If the panelists could turn their video on. Oh, terrific, you're all there. Good. So I'm really honored here to have 4 panelists. Karen Kelleher, Executive Director of LISC Boston. Karen, wave your hand. Oh, people can see your name. Great. Sherry Riva, Founder and CEO of Compass Working Capital. David Stifler, President of the Equifax Foundation and Corporate Social Responsibility Leader. And then 4th, Mimi Turchinetz, Assistant Deputy Director of the Mayor's Office of Financial Empowerment, and our host. So let's just quickly have each of you kind of talk about your organization and your approach to wealth building here in Boston. And let's start with Karen.
Thanks so much, Prabal. It's an honor to be on this panel. And I unfortunately have to start by apologizing that I am not my colleague, Carlene Porcena, who works in our National Economic Development Group and had a personal emergency today. So y'all are stuck with me. But I'm Karen Kelleher. I'm the Executive Director of LISC Boston. And as suggested by the fact that I have a national colleague, LISC is a national organization that supports cross-sector community development across the country, but we have very, very deep local roots, and Boston actually is our very first local office and has been here for more than 40 years, investing over $400 million in Massachusetts communities. We do that through investment, capacity building, but mostly we work very deeply with the community, and that is predominantly low-income communities with a very intentional racial equity overlay. We approach financial stability in many ways, but the Roxbury Center for Financial Empowerment uses the Financial Opportunity Center model that we use across the country, which combines different supports and empowerment strategies in one model, because that is the way that the folks who we are supporting have to address the issue, right? There's financial coaching, married with workforce development, married with income supports. And that model has really proved to be more effective than those 3 things separately. We are a Boston Builds credit partner, and we're excited to be building a new approach to credit building for entrepreneurs. We've had the opportunity over the last year since the pandemic hit to be working very, very deeply supporting entrepreneurs of color through the pandemic. And I just have to give a shout out to Prabal, who does the work that he does at the Fed, but when the PPP program came and sort of was a flyby for minority-owned businesses, a group came together to try to get a different result in the second round, and LISC had the opportunity to participate in that. We put out a call for volunteers to help us support businesses to make those applications, and Prabal and his team raised their hands and personally did that volunteer work in the first round of that work. Little did we know we'd be doing that for a year, and there are many lessons learned from that. I won't try to share them all in this intro, but LISC works with entrepreneurs on both capital and capacity building and ecosystem building. And I can only underscore what Trin and the mayor said and Prabal about the need to work on both empowering people to navigate the existing systems, but stepping back and thinking about those systems and how they are undermining the success of those that we serve and how they set up racial inequity. So there's a lot to say. I think we're only doing 3 minutes here. So I'll just say the data that Prabal showed really points to what we all know, which is that crisis exacerbates inequality. And so resiliency is something that is an important part of what we need to build into all of our work addressing racial equity. So I'm really interested in the conversation with this incredible group of folks about how we do that. Thank you.
Terrific, thank you. Next, let's have Sherry speak. Go ahead, Sherry.
Great, thank you, Prabal. And I, Justin, have a couple slides. If you could put those up, I'll go ahead and get started. Make sure those are. There we go. Great. So again, thanks, Prabal, and a special thanks to Mayor Janey for just the really wonderful opening remarks. Honor to be here with all of you and the fellow panelists. My name is Riva. I'm the founder and CEO at Compass Working Capital. Again, over these next sort of 3 to 5 minutes, I'm going to do a brief intro to Compass, the flagship program model that we offer, and just want to say a little bit about our vision for Boston becoming the first city in the nation where wealth building could really be the norm and not the exception for families in federally subsidized housing. So again, as you can see here, Compass, we're a nonprofit financial services organization. We're headquartered here in Boston, but we do work around the country. And our mission, as you can see here, is really focused on supporting families to build assets and financial capabilities as a pathway to economic opportunity. Like many of the panelists here today, we really focus on asset building because we know that assets are, in fact, a stronger predictor of mobility than income. And yet, in particular, for so many families in our housing and welfare systems, rules often discourage and penalize savings, making it really difficult for families to get ahead. Next slide, please. So let me just take a brief moment to explain how we help families build assets through our flagship program called the Family Self-Sufficiency Program, which is a program for families who live in federally subsidized housing. So just a quick moment on how this program works. When you live in subsidized housing, your rent is tied to your income. You're usually paying about 30% of your income toward rent. So what this means is you're working more, you're paying more rent, you're likely losing other benefits tied to income. And so we hear all the time from families in our programs that they feel they're trying to move forward, but for every step they take forward, they feel like they take 2 steps back and end up feeling trapped. And this is where the power, the sort of promise of the Family Self-Sufficiency Program comes in. You can see a little bit in this visual here. It's a HUD program that allows families, as they work and increase their income, every time their rent increases due to an increase in work, that rent payment, that difference goes into a savings account, which builds over time, kind of converts a monthly rent payment into a savings deposit that families can use to achieve their goals and dreams. FSS is an extraordinary model. There really isn't an anti-poverty program like it in the country, and yet what we see is it has been vastly underutilized around the country and also importantly here in Boston. Next slide, please. So Compass, 2010, we started doing this work. We became the first nonprofit to run the program on behalf of local housing partners. And our focus is really looking at and pairing that asset account with financial coaching, asset building, access to other financial information and resources to really help expand the program's scope and impact. Next slide, please. So we do this work here in Boston with a number of just incredible housing partners. You can see here on the slide, both public housing authorities along with nonprofit and for-profit housing partners as well. Next slide, please. So just take a super quick moment here. We're serving about 1,100 families a year through these partnerships and hoping to triple over the next year. 91% of our clients are women, 85% identify as people of color, 80% are parents, on average earning about $20,000 a year. Really important data point that I love to share is that to date, these families together have saved nearly $9 million towards their goals and dreams. You can see Mary Lou's pictured here, one of the graduates of our program here in Boston. She, in fact, became a homeowner through the program and then also launched and expanded her own business. This is really what asset building looks like. So we always just like to take a moment to really lift up and celebrate the families who are doing this work. And so the next slide, which I think is the second to last, I know I'm talking fast here. Just in closing this opening remarks here is that our vision is really a day when thinking about how could Boston become the first city in the country where every family in the city in federally subsidized housing has the opportunity to use their housing assistance to access economic opportunity and build wealth. And we think about this work now in the context of the pandemic recovery. Prabal, appreciated so much your opening remarks here. So many of these issues were here before the pandemic, of course, has only become more urgent since COVID. And we really know and we believe that we need bolder and less incremental solutions to really promoting mobility and closing the racial wealth gap. And we look at a program like FSS as a illustrative of the kind of tools we need, that can be part of the recovery, and more broadly illustrative of the kinds of tools we need to ensure that asset building is really normative, not the exception for families in our housing and welfare systems. And just in closing, I just wanted the next slide, please, just to give you a sense of what this would look like. So today in Boston, we estimate there's about 24,000 families eligible for this program. About 1,100 families are participating today, so about 5% enrollment, which is a pretty typical enrollment rate around the country. We are hoping to serve, to triple in size and serve about 3,300 families in the coming year. Together, these families would save about $20 million. These are, again, rental payments that go back into the pockets of families. And then imagine if we could get to scale in the city. We'd be telling thousands of stories like Mary Lou's and families saving upwards of $150 million through the program. So a final I wanted to acknowledge and thank Boston Housing Authority in particular, who's been just an extraordinary partner in the last year. And we're working right now and testing an opt-out approach to the program that could really help us get closer to achieving this vision. So look forward to the Q&A. Thank you very much.
Thank you so much, Sherry. That's really remarkable and just great progress to see. And very specific, right? Focused on this very specific population with a solution that everyone not just understands, but feels, right? Living here in the United States and thinking about the dream of home ownership and savings. So next we'll have David Stifler, president of the Equifax Foundation. David, take it away.
Thanks, Prabal. And it's just really an honor to be here today with the panel in today's discussion. So I'm David Stifler. As Prabal said, I'm the president of the Equifax Foundation, and I handle all of our social impact work for our national and international operations. Very familiar with the Boston environment, even though I'm based in St. Louis, and I was always traveling prior to COVID to Atlanta and national places in which we do work. COVID's been a very interesting year, and I think this audience would be happy to know that one of the offshoots of that is a greater dialogue between the three bureaus on exactly how credit or access to credit is going to work in the communities in which we live and work. And, I think everybody's familiar, the credit scores and models, they're always changing. But in 2020, we saw a lot of new restrictions around lending and collecting and reporting that changed a lot of thinking, or at least for folks who might have been on the fringe of the work, really exposed them some things that they didn't know. And the lending institutions were rethinking what it meant to put dollars on tables for riskier borrowers. So at Equifax, we spent a lot of time, a considerable amount of time at the leadership level thinking, what can we do to better provide access to credit? What are those data attributes that are going to be of use to environments that are low to moderate income? So alternative data is sort of the phrase that's carrying the day right now, but it's been referenced with, I think, two of the previous panelists. How can rent reporting work? How can utility and different payments like that go to work to de-risk certain consumers as we're trying to get more money into their hands to live the financial lives they want to live? So I work at the intersection of philanthropy and the commercial side of the business. I've long since abandoned the idea that philanthropy can really answer for the market failures that often define low to moderate income consumers' lives. So I would conclude with this for my opening statement. We know Boston builds credit well. I've been involved with the mayor's office and Constance and the group for quite a while now. And we actually replicated the framework of Boston builds credit in both St. Louis and Atlanta, where Equifax has its two largest operations, because we believe so much in what the cross-sector collaboration looks like. So I look forward to the Q&A and the dialogue to come, and I can happily answer any questions about how our bureau and the other two are trying to answer questions around wealth building, because credit is foundational to that journey.
Thank you, David, and thanks for also setting what's happening here in a national context that you see. So our final panelist, Mimi Turchinetz. Mimi, please.
Thank you, Prabal, and thank you, everybody. Thanks for joining us today in this really important conversation about how to build back from the refuse of this pandemic. I'm going to talk about the specifics around the Office of Financial Empowerment. I'm the Assistant Deputy and also the Director of the Boston Tax Help Coalition, which is one of our premier programs at the OFE. The City of Boston has been providing financial empowerment services since 2001, when we created the Earned Income Tax Credit Action Coalition, which was launched to address a $10 million gap of EITC left on the table by low-income taxpayers. And we created this work as an anti-poverty strategy rooted in tax justice and EITC access, which grew to embody a full complement of wealth-building strategies and a continuum to lead towards economic mobility. So the OFE was created in 2014 to expand on this work and to develop strategies and programs to provide equitable wealth building and to address the racial wealth gap. And we have three fundamental anchors for all of our programs. One is to negate wealth stripping and to maximize tax credits and benefits, eliminating predatory fees and practices through free, quality, client-based services, meeting the clients where they're at all times, and never with any assessment of fault, especially in these times of what's going to happen, digging out from the pandemic. The other was, the second is expand income, either through increased wages or tax refunds, which is a big part of the Financial Opportunity Center, as Karen laid it out, as well as the tax program, and then create wealth to build assets. As I stated earlier, I'm the director of the Tax Coalition, which is a cross-sector collaboration that provides free tax preparation and credit building at tax time. We seek to be fully inclusive and provide tax services in 7 languages and to the disability community. And we serve the working poor. Our numbers very much reflect the presentation Prabal gave. 65% women, 55% Black, 20% Latino. The annual income of our taxpayers is $24,000 a year. So that clearly that's pretty tough in terms of making your way in Boston. Since 2001, the Tax Coalition has recruited over 5,000 volunteers, prepared more than 180,000 free tax returns, and generated over $270 million in combined tax refunds and credits. We had a great graduate intern a couple of years ago who was able to determine that we had lifted 12% of our taxpayers above the poverty line through their EITC that year. And so that's probably pretty consistent annually. The other key program that is really important to talk about is the financial checkup, which is an evidence-based, effective, light touch, one-on-one credit building program that increases credit scores and financial health. It's been a real substantive component of our tax program, and really work on developing, increasing people's credit. In 2020, we conducted over 1,000 financial checkups, and of the 327 taxpayers who allowed us to do a pre and post credit pull, nearly half improved their credit scores with an average improvement of 11 points. Just a couple of things about the pandemic in this year. Obviously, the whole tax season took place during the pandemic. We had been very innovative in the past, and so we kind of had to dig up that innovation and create new methods to provide both drop-off as well as fully virtual tax preparation. We ended up doing close to 9,000 tax returns as of May 17th, and those numbers should go up. And we also were able to complete 348 financial checkups. And that was pretty incredible, given that most people around the country weren't doing any financial education with their tax preparation at all. There's a whole host of other programs and services that we provide at the Office of Financial Empowerment. We can go into them later, or I can take questions, but they're also on the slide. Thank you.
Terrific, Mimi, and thank you for that. And there's so much there that you talked about, the powerful anti-poverty nature of the EITC, all of the help that you provided during the pandemic to residents, and even ideas that are really looking at the future, like education savings accounts. And when we think about wealth building, and this is perhaps what Sherry's effort as well, how do you change people, and Karen's effort around small business, how do you change people's mindsets, right, about the future, and thinking about the power of a child and their parents thinking about attending college, and the other changes that spills over into similarly research around home ownership and about starting a business. What spillover effect does that have for an individual, a family, and a city, which is what we're here to talk about. So I think my first question does relate to thinking about the city, and it's about scale and what it would take to get to scale. So, you spoke individually about your organizations, and some of you touched on scale. I'd love to hear a little more about what systems or policy changes would be needed to help your effort get to scale. What would be needed to help? Is it simply a case of, someone's more funds or money, maybe the divorce settlement from the Gateses somehow finds its way into your coffers. But in a lot of cases, it's not just money, right? It's structures and policy changes and collaboration. I'd love to hear from each of you. What do you think it takes to get your efforts to scale? And I don't know if there's a raise hand function, but why don't I just start in the order that we just went, and then we'll vary that up some. But let's go Karen, Sherry, David, and then Mimi. Just a quick response here to what would it take to get to scale?
Thanks, Prabal. I'm going to talk about the small business work. LISC does a lot of work in housing and green homes and green jobs, but I'm going to talk about small business to try to be concise, because I think there's just this great, powerful example. The work that I talked about before, which started with an effort to make PPP, the federal government's response to small businesses, actually get to minority-owned businesses. There's, again, many lessons learned there, led to a coalition of more than 100 business support organizations throughout the state working together. And that group has taken what was an emergency response effort and created a permanent coalition to try to really build an ecosystem that better supports equality in the support of minority-owned businesses in the Commonwealth. And so the goal is to achieve equity by 2030. And so it is in and of itself a scaling effort, and it is complex and has identified 3 major areas. It'll probably end up expanding, but capital access and business support, and the third being access to contracts and networks. There's a policy and research committee, and we are trying to really think big, and there's multiple strategies in each of them. So that to me is a very, very exciting and ambitious scaling strategy, which is daunting and will require many, many hands and a lot of policy change and capital dollars invested and creativity and innovation and connecting the assets in the ecosystem to those who need them. So that's one short answer to scaling. It's daunting to do that in every aspect of our work, I think, but I'll offer that and pass the microphone back.
Go ahead, Sherry.
Sure. And again, this is a big question. And so I think about it more through the lane in which we work and the lens that we look through. But really, probably 3 things stand out for us when we think about wealth building, especially for families in our housing and welfare systems. So number 1, we look at the elimination of asset limits, which still exist, even here in Massachusetts, with some of the benefit programs that we offer, and even in down payment assistance programs. So this idea that having savings and wealth just a little bit disqualifies you from things. It's like we need a real shift in that. So asset limits, number 1. Number two, we would look at, I alluded really quickly to it at the end, this idea of an opt-out model. So sort of borrowing from the best of behavioral economics and the things we do to help wealthy families get wealthy faster. And we do the opposite often for families with low income. So, sort of all the barriers and hurdles we put in place, people have to prove their struggle to get access to the supports they need. So what works? What do we do to help higher income, higher net worth families get wealthier? And how do we sort of bring that thinking as well? So for us, on something like an FSS program or a children's savings program is looking at models like opt-out programs that would really allow you to get to scale, rather than this incremental, you have to jump through all these hoops and enroll in a program. And the third thing I think is really important is this idea of sort of the narrative shifting, like changing the way we think about and talk about the reasons why families are poor, which is it's not about personal responsibility, that we have structural and systemic issues we have to address. And until we do that work well and with honesty and urgency, we end up with programs that I think still end up in these really incremental places. And so that narrative shifting, I think, will really matter as we think about how do we get to scale in really big ways. And we need solutions that are commensurate, of course, with our history. And I think there are places we can begin to start now to do that work. So those are the three that I would highlight.
Great, Sherry. Very, very well put. And you also bring up the cliff effect, right? Where and how that can affect, you all are trying to do something, initiative, effort that helps an individual family, and yet then they're penalized for participating in that. And so it's crazy, but it's complicated, and every piece was probably put in there for a reason, but then they interact in ways that end up not making sense. Go ahead, David, and then Mimi.
Sure. I'd build off what Sherry just said about narratives. And the two narratives I'm most familiar with are the philanthropic ones in this country, as well as the corporate side. So on the philanthropic side, and I've had these conversations many times with Gail and United Way out of Boston, which is you hope that there are some of these signals that we see are heralding a new day in which nonprofits don't have to run and jump through so many hoops to do work that they know implicitly how to do every day. And whether it's Mackenzie Bezos giving the money away without too many strictures, the idea of trusting these agencies to do the work that they do every day without having to report into a corporation that has no sense of what the work really truly looks like, except for people like me. And even I don't know what it looks like every day. I think that narrative has to change. And while we saw some of those massive announcements of philanthropic output in the wake of COVID in 2020, I think we all know that those are not probably going to be dollar for dollar amounts. So it's more about how the partnerships work. It's more about equity, probably participatory philanthropy, a lot of different thinking about what equity really means. Again, for all of you that work for nonprofits, philanthropy is troubling and problematic almost by its very nature. So how we make it more transparent, how we make it more available, that narrative needs to shift. From a corporate perspective, I think about Chase's announcement recently about not using the traditional credit report to issue a card. Now, they're still going to use the bureaus to use alternative data to de-risk that consumer. So there's going to be some point that they're checking in with data on the risk of issuing the card. But that to me is another signal. And I think the institutions like mine, the bureaus, the institutions and the lenders, there has to be the institutional change. It cannot be a philanthropic answer. And those are not easy answers to come by, but again, I think in Chase signaled this, there's a lot of work behind the scenes right now with the bureaus who, again, as we all know, they're basically scriveners, in 100 years of lending. So who better to know what is or is not happening with the application of data into lending than the bureaus and the banks. So I see and I hope, and I see investors pushing harder. I see talent pushing harder to say, hey, corporations, do better. And by better, I mean help more people who have been excluded historically get into a financial mainstream that is safe and protected.
Thank you, David, and thank you for sharing those views about support and the important shift in perspective, both from companies and from philanthropy. Packed a lot in there. Mimi.
Yeah, I mean, I think that we we know that the one real universal program for folks is tax preparation. And so part of what happened over the years is that we were at scale at around 13,000 just because we only had so many volunteers and only had so many partners and facilities. And so we really need to expand the access to tax preparation. And that's tough, but I think it would take more resources, more volunteers, more institutional support. I mean, we really built the thing with the Federal Reserve Bank of Boston, right? And also with the Greater Boston Chamber. So kind of doing that call again around how to expand and develop that work. I mean, the other thing that would be really significant and helpful for us, we've been talking about doing integration and other city programs. And so what we're really interested in to talk to the administration about as we build back better is really being able to do credit building in conjunction with other kinds of programs, also opening bank accounts, trying to drop in and make sure that people have access to non-predatory Bank on Boston bank accounts. So that those are the things to try to figure out how to increase scale in the programs and services that we currently do. The other thing that I have dreamt about, and I would really love to figure out a way to do this, LISC, is to expand our financial opportunity center footprint. Right now, we just have an FOC in Roxbury. It sure would be great to figure out a way to fund and fully staff up an FOC in East Boston and in Mattapan, right? I mean, just so that we can reach the whole city. And then just the other thing in terms of, you know, recognizing that it's not just about programs and services, obviously it's also about policies and strategies. And so we have been working through the Boston Builds Credit and another partnership called the Healthy Families EITC Coalition to expand the state earned income credit to 50% of the federal credit, and then also to create a guaranteed minimum wage in a bill that's been filed by Senator Eldridge and Margie Decker, Rep. Decker. So those are some of the things that we're looking at.
Terrific, thank you. Thank you, Mimi. And there's so much in what all of you talked about. I want to sort of keep on the issue of scale. You know, we spent a little time talking about philanthropy and about corporations and about the city. There is the federal government, and you mentioned Build Back Better, Mimi, which is of course the Biden's administration's initial sort of slogan for its plans. One difference I should note between the last recession and this one is between the Trump and Biden administrations, there's been a very different response fiscally to this recession. There's been enormous stimulus plans passed. Boy, they all have different acronyms now. I can't keep them straight. the Families First Coronavirus Act, the CARES Act, the thing that passed in December that has a name I can't remember, the American Rescue Plan, right? And those are two different things. And and then there's other proposed plans, the family plan, others. But thinking about just what has passed and funds that will be conveyed to states and localities with varying degrees of flexibility, some with a lot of flexibility, to be used, that must be used right during some period of time. This is a real opportunity. This is bigger than philanthropy when you start thinking about the sums that are being involved here, much bigger. And what can we do? What can be done? What would be effective? And most importantly, what would be effective that could make the case for sustainability? Because if you simply spent money and it wasn't effective, that wouldn't exactly build a case for further revenue down the line. And so I'd love to hear you all. And I'm just going to throw this open, and then I'll throw it open to the audience to send questions through the chat. But what do y'all think? These are big plans and big dollars that have some flexibility to them. How could they be used to create a sustainable system? A, and B, like, what would you, is there anything that makes you afraid? Like, don't do that, do this. But let's focus most on the what to do.
I'll volunteer to go first, even though I'm unprepared, but that's a great question, Prabal. And we have so much money coming. And honestly, the coalition I talked about before is about to, with Boston Indicators, release a report tomorrow called The Color of the Capital Gap that is really putting forth specific strategies for trying to address that gap. But it's mindful of the fact that these resources are coming now. And we have a generational opportunity to use those resources to build sustainable tools. So a couple principles that you'll find in that report and that I feel strongly about. You have to put equity first, right? We saw this with the PPP program. It was a rush to the gate program, and that really served underserved people poorly, right? It served racial minorities poorly. It served people who were underbanked, didn't have those relationships, people who didn't speak English, people who had less digital fluency, people who were less connected to the information about that program. We spent over a year now trying to like manually connect that program to those people, bridging all those gaps. But the state came in the end provided $684 million of grant dollars to small businesses, also for the same purpose, getting them through the pandemic. And cash, honestly, on some level is king. People needed that. But they put equity first, and they ended up making 40% of those dollars available to minority-owned businesses. So your question is really important. It really matters how you frame how those dollars go out the door. With the small business piece, it matters who's distributing those funds. The specific, community development financial institutions are focused on people who have greater needs. And so putting the dollars in the hands of CDFIs and nonprofit lenders, public lenders who put the needs of underserved businesses first is critical. And then creative ideas. One idea you would find in that report that's being released tomorrow is a local economy preservation fund, which actually lends only to businesses that are willing to when they want to get out of their business, to sell it to their employees, to create that asset building opportunity. So there's a start for the conversation.
Yeah, I'd jump in next if that's okay, Prabal. Sorry to cut you off. I would, I think that's, and Karen talked about technology too, and that made me think of data. Because again, while I work for a company that is filled with some of the most well-trained, intelligent data scientists in the world, when we look at how it gets applied within municipal or community settings, we know that we're not staffing nonprofits because of the scarcity mindset with the type of data analysis leaders or visualizers or the narratives. So we call them storytellers at Equifax. I'm like, wow, we have the luxury of storytellers and data at a large data company. But I sit in St. Louis. I'm a part of a conversation right now about the 500+ million federal dollars that are coming down the pipe, and it's less of a solution that comes to mind and more of a concern, which is, again, when I think of the nonprofit sector, they're always held to this really high standard of efforts to outcomes, this painful, often impossible adherence to produce these results with this dollar amount or else we won't come back kind of thing. And yet, with these large scale efforts, who's measuring what and why? I mean, level setting what the economic landscape looks like by municipality, which again, Prabal, you and teams like yours, you guys do a great job in this, but I mean, even to give the tools to the NGOs and the different corporations to work collaboratively when you have an infusion of dollars like that are currently coming in, it's just so critical. I mean, there's just a lot of vision. I was on a call last night where the first round of PPP, it wasn't open to anybody who was defaulted on their student loan. That's a third of the individuals being held in ed and treasury. So it's just, there's a rush to get the money out. There's a rush to apply it in meaningful ways. And yet I worry about the technology and data fabric that's allowed and supported within our municipalities that can sustain and show what's working, what isn't, what's the improvement and why.
Others, please jump in. Those great thoughts, David.
Yeah, I mean, this is Mimi. One of the things that I would say is that, when I looked at that money coming out of the American Rescue Plan and saw there was $1 billion going to Head Start and $1 billion plus going to childcare, and I thought, okay, so we need to figure out a way to really rebuild the childcare industry in a way that the women who have fallen so far behind in the pandemic so that they can go back to work. We know that women fell behind a decade. And so we really need to frame some of this work and think about scale specifically for women and women of color. Obviously, a rising tide lifts all boats. And so, how do we do that? I mean, we don't provide childcare at the Financial Opportunity Center. How could we, right? I mean, there's a great City of Boston childcare center. That's a good model. That's an important model. I mean, the other thing is that we have a bridge program that LISC provided us the resources with, and we had a bridge to culinary and also to hospitality, and then a digital bridge that we're doing right now. But one of the things that I'm really excited about doing is creating a bridge to green jobs and trying to have that bridge be more technical and take into consideration the fact that women look at green jobs and they think, oh, that's construction, I don't want to do that. So really that we need to explore what that looks like and how do we get women into jobs that that they're gonna really grow from, because most of our folks that we serve are underemployed. I mean, I think that we've seen that, and that's a big challenge, I think.
It's Sherry, I'm going to give you a chance here to jump in.
I mean, very little just to add, but one or two quick reflections. I would echo Karen's, the starting place is taking an equity lens on all of these ideas and how will they have an impact on communities of color. So thinking, for example, about the child tax credit and, looking at these policies through the lens of who will impact the most and keeping that front and center. And then the other really quick reflection, building on something David said around this idea of sort of trust-based capital from philanthropy and corporate to nonprofits. I think of that same idea about trust-based capital to families. So believing that families are the experts in their own lives and know what they need to move their families forward. Of course, access to the opportunities and information all of us need, good financial coaching, healthcare, education. And so, we're interested at Compass in this sort of emerging UBI model. So giving families, right, capital that they can use and believing in their ability to do that, I think is just another theme and sort of lens to be looking through as we think about this work. It gets back to the narrative shifting as well, which I think is so critical.
Fabulous. And here, I'm opening up to audience questions. Just put them in the chat. I think there's probably a key that says to all panelists or to everyone. Just type them in. Someone here was going to feed them to me, and we'll or I'll see them, and we'll take questions. As we wait for the questions to come in, I think I just want to respond to this issue here about thinking about, childcare and workforce and jobs and businesses, and just noting that in a lot of times, it's really important to have that solid community engagement that has a front door to these types of initiatives and programs. I'm struck, at the Fed, I get calls from entities now that will say, hey, we have funds to do, workforce training in green jobs, but this isn't our thing. Can you help us connect with those who can, right? And so sometimes you have these initiatives and efforts and people are not connected to the community, and then they try to reinvent something that connects or put things out in ways that don't make sense or not in appropriate languages or just don't have a front door. And I'm just wondering, like, is there something collective here? These are all different wealth building strategies, but are there some principles or things that could be done to ensure that people have access to what's coming? I'd love any ideas here.
I've gone first too many times, but I don't like awkward silences. And I'm gonna bring up the technology conversation. It's so hard. And as we think about the ecosystem building in the small business space, getting resources to all the people who can use them is a real challenge. And if it has to be done manually through local organizations and people that they trust, which is what we found in the PPP initiative, there's just so much like we can't move that fast. So we had 3 weeks total to get applications in for that state program. 3 weeks. We managed to touch 1,100 businesses with a coalition that already existed, already had a way of doing that work. But so we have to address the digital fluency, digital access divide aggressively, because tech tools are a powerful way for us to actually reach people with the resources that they need and empower them and include them. So we have to tackle that in a lot of different ways.
Yeah, it's so interesting when we think about the flexibility that technology allows, but what it costs, right? Both to have broadband, even though it's virtual, you still need childcare to do a training program, right? Like you can't, grade your home, but I mean, your 4-year-old might just walk right in through the door and interrupt everything. So what do you do then? And we may find out in a few minutes when my 4-year-old wakes up from his nap. So that we don't want to have happen. But if you're undergoing a training program, yes, there's some flexibility around time and schedule now, but people are still human. And if you're working 2 jobs, just because you can do a training program, some modules at night, doesn't mean it's going to work for you. And similarly with an entrepreneur, making your business work, how to access some of these resources and find out about things. Still takes some infrastructure around that. So I just, I think that this idea of sort of earning to learn and getting some support during these kinds of initiatives and programs, I think is one area. And then the other, I'm curious, Sherry, what you've seen, kind of work in the housing areas in order to sort of connect to public housing. I know you're working on saving for for assets, but what have you found to be effective, and what do you think in this area of technology might be something that we are overlooking, or that's possible now that might not have been possible before?
Yeah, I'm so glad you asked, because I was going to sort of chime in and say I think there's a lot of positive here, and let's be sure to have a kind of nuanced conversation about that while recognizing that there are still access issues. So for us, what we've seen, and it depends, of course, what we mean by technology, right? Like that can be, not everyone has a laptop at home, but all of our families most of our families, probably in the high 90s, have a smartphone. And so, for example, now we went from an organization that 10% of our financial coaching was happening by phone and 90% was in person. We are now 100%, of course, virtual. So that can mean a Zoom meeting. More likely it's a phone call. And when we surveyed our families, in sort of anticipation about an eventual return, our families told us that 80% of families said that coaching virtually was the same or better than it was in person. So it's most important to really continue to ask in our case, the residents that we're working with, but for all the reasons we can imagine, it's, the difference between taking 2 buses down to a downtown office and having to take time off work to do that, as opposed to take your lunch break and call your coach at Compass and run through your credit report and go back to work, is a benefit that a lot of hiring people in really flexible jobs can do all the time, but not, of course, always there. And I think the other thing that I wanted to mention when it comes to innovation around technology for the work we're doing in public housing, I know this is probably going to sound crazy, but we are now allowed to and able to have families sign up for this powerful wealth building program using DocuSign. That's what innovation looks like now in the public housing community. Prior to COVID, everything had to be signed on paper, 18 photocopies of it. These are the kinds of hurdles and barriers we put in place. And now we have about 85% of our families are enrolling in this wealth building program through an enrollment portal that's mobile based. And like that, we had a wonderful story of a mom who shared that she enrolled in the program from her cell phone while a passenger in a car her friend was driving her. I can't remember if it was to work or from work. That's all it took. From her phone, I want to start saving my rent payments towards my goals and dreams. Those are seismic shifts in a system that doesn't always move quickly. And so those are the kinds of things that we want to make sure stick on the other side of COVID. We don't need to require families to come in person all the time. We don't need to ask people to sign things on paper when we accept DocuSign for all kinds of transactions, right? And making sure we extend those kinds of benefits to families in our housing and welfare programs as well. So anyway, I know those are really granular, but really important examples of what this can look like as well.
Yeah, I mean, I think the other interesting thing when you look at our numbers for tax preparation this year, maybe 20%, I don't have the exact numbers yet, were done virtually. And it was very, very hard for people at the beginning. And some people couldn't do virtual at all. I mean, when we kind of practiced this in pandemic number 1, and lots of people, it took almost 3 weeks for folks to upload their returns and to kind of go through the digital process. And so what some of the sites said is that we're just going to do drop off. It's going to be no digital at all. But we did do some. And I think that's here to stay. Maintaining access to resources and services electronically is a really good thing if you can assist people, like Sherry said, right? 100% coaching virtually. So that is something that we're going to kind of craft and figure out. I mean, we hope at the end of the day, it does provide better access. That's the goal.
These are great examples. Give me some techno optimism. Karen, was there more around technology for small businesses and for people starting up businesses that have opportunity, and then for everyone? I mean, technology sometimes opens these great windows, and then we have this time when everything's great, and then there's maybe bad actors or more aggressive actors that then kind of see what's happening, and then you get this kind of crowding effect, and where it becomes harder to be effective, and how can we stop that from happening? But let's focus on the positive. What things that you saw, Karen, in with small businesses or startups that are positive, fintechs or others that help you think about
huge positives. Huge. Sorry, I didn't mean to cut you off. And in fact, we are currently running an accelerator program that is focused on growth, stabilizing your business coming out of the pandemic, but then developing a plan to double your business using digital tools. Because what we found, and there's not a lot of research on this, but there's some, is that small businesses are at a significant disadvantage to big businesses because they're not using technology tools. And so we started on that path before the pandemic. The pandemic hit and we kind of pivoted to really pivot your business strategy, but it came right back to the digital tools, because when you can't be physically with your customer, you need to meet them in the digital world. You need to have more of an online presence. You need to find a way to do e-commerce. You need to market digitally. And a lot of businesses that felt they didn't need those tools saw how powerful they were during the course of the pandemic. And so there's really an opening right now for small businesses to use those tools to build back their stability, to access new markets, to create the kinds of organizational stability and documentation and clarity that enables them to access financing, which is such a huge gap for them. So any number of examples there, but in that accelerator program, we have businesses, this is a BIPOC focused accelerator, that said it just transformed their business to implement these tools and then access new markets. And they're now looking for the next stage of growth. So it's exciting. Figuring out how to scale it is a bigger strategy. And there's yet another level of technology to that, in that we are actually have a partner who's building a digital application that is sort of running behind that program. We use MBA students as volunteers with a consulting firm that has built the methodology and this application, which walks those consulting teams through a process. We're developing that so that we can scale the strategy through other business support providers, and also ultimately maybe as a self-help tool for businesses themselves.
Terrific examples. We had a question coming through the chat from Lynn Sanders about how current models, so alludes a bit to what David was talking about earlier, philanthropic, corporate, government, lead to this environment where nonprofits are competing with each other, and yet they're, providing services, working towards similar goals as others, but they have to compete with each other for resources rather than collaborating effectively or collectively. And we just love any further commentary on this, question of how to get more groups working together with a common goal, and what would be a system change that would allow that to happen more often.
That's a tough one. It's about behavior and exampling, and having some of the more premier large scale foundations out there. And I think many of them are doing this now, which is saying that we understand that we need to be far better listeners and far less imposing in our idea of what outcomes need to be, when most of us know that's really outputs that are happening anyways. So I, for instance, and I can only reference my own world, but we have few grantees, and the money we give to them, they help define the outcomes with us, but they can re-grant those dollars to the partners that they work with, who are part of the collaborative structure that we're a part of in Atlanta and St. Louis. I think there's a number of actually fairly simple approaches to this. Collective impact is that unicorn that Stanford foisted upon us and we're all trying to get to, which is really difficult. I love backbone organizations. I like the idea of working together. But how do we get there? By taking our institutional hats off to do the right thing by the consumers and communities that we're trying to affect. It's just hard. This is not much of an answer, but I do think it comes down to a few prominent examples of foundations, or like McKinsey Bezos saying, man, we looked at your 990, we see your board, we know what you've done. Here's a large lump sum, go for it. We trust you because you've earned that trust. I hate to be overly simplistic, but I think it might come down to some things like that.
That's a good response, and I know I put you on the spot here. We need to get to our sort of last question here in a moment, and I guess I'm going to try to get a one-sentence answer from everyone. It can be a run-on sentence, it's okay, but only commas, no periods. What makes you optimistic about reducing the racial wealth divide and reducing inequality? What in a sentence makes you optimistic, or if it happened, would make you more optimistic? You can take that question however you want, but I'm springing this on everyone, audience, so they haven't had a chance to think about this. I'll go first just to give them a bit of time. I think one thing that makes me optimistic is, I think that the new level of attention to the precarity that the pandemic has put across has led to this new thinking about things like sick leave, like access to insurance and benefits, and the importance of having some kind of emergency savings cushion. I think that there's some space here to act. There's a semicolon in there. That wasn't two sentences. There, I gave you some time with filibustering. All right, let's go, Boyd.
I'll say what makes me optimistic.
Go ahead.
And Janey makes me optimistic. I think that having the first Black woman mayor in the city is really important, and she can lead by example. The administration has been able to build on the work that the former mayor provided, and there's a lot of opportunity. I mean, there's just really if you can break down silos and really use the oodles of resources coming from Washington and from the state. There's some really creative stuff that people can do. And so it is about breaking down silos and having, I think, like we said today, the Mass Taxpayer Foundation came out with a report on the need to address the racial wealth gap. I mean, we need to hold folks accountable though, right? I mean, they can say this stuff, but then those of us in policymakers and folk in the community need to hold them accountable when they say this kind of stuff. But I'm optimistic.
Well put, Mimi, and you all are the host, so you get a paragraph. Good paragraph. All right, let's do Sherry and then David, then Karen.
Sure. This is a big question, Prabal, but I would say what makes me optimistic every single day is working directly with families. Just every single day fills me with optimism, so much sort of energy and aspiration to harness. And the other thing that I would say that makes me optimistic is I really do feel like the conversation, as you pointed to, Prabal, has shifted. We're having different conversations. I hope they stick. And in particular, really meaningful open conversations about reparations has given me a lot of optimism. Even if we can't figure out yet how to get there, the fact that we're having different conversations is filling me with optimism, and I'm grateful to be a part of them.
Great. I agree with all my panelists. And I think there are a lot of things that make me optimistic, but most specifically for me in my world of work these days would be the growing cohort of reform Black bankers who are starting fintechs to address the many historic issues of lending in our country.
Now all the easy ones are taken. I'm gonna say the leaders of color who are stepping up give me optimism. I am energized and inspired and pushed by leaders of color stepping up in a lot more places than they have been in Greater Boston, for sure. And I'm gonna add another one because I'm really just saying the same thing Mimi did about Kim Janey, energizing her. I see calls for equity in spaces that have been predominantly white spaces where that conversation wasn't happening. And that gives me optimism. There's a long way to go. There's a lot of learning, there's a lot of work, there's a lot of rebuilding, but that is new.
Fantastic, great. Well, you all made me optimistic and we're at 3:30. So I don't know if there's anything left to say. Thank you, audience, for participating. Mimi, any last words, or Constance?
Well, my last words are just thank you so much, Prabal, for jumping in for our moderator. It was seamless. I just thank you so much to all my fellow panelists. I think it was an important conversation.
Thank you.
I think that's it. Thank you all so much for joining us, and we will try to make the video available. Take care, everybody. Thank you.
Thank you.